Hey everybody, welcome back to Drawbridge Finance. Today I'm looking at calculating out how many shares I need to purchase in order to buy stock with the dividend payout. Hey everyone, as always, I'm not a professional investor. I don't work in the finance industry, and this is an opinion channel about money. Today, I want to talk to you about minimum investment required in order to use the dividend payout to actually purchase at least one share. And in order to do this, I created a little calculator. Now, of course, this calculator is available to my patrons. So if you're a patron already, you can go to Patreon. You can download this file. If you're not interested in subscribing monthly to my Patreon account to get files like this, you can check out my Etsy store. I'll put a link in the description down below, and I'll put a link at the end of the video. You can check that out. I've got other financial calculators on there available. They're a couple of dollars. It helps the channel and it helps you make these calculations. Otherwise, you can create a chart like this on your own. I'll show you guys the math on kind of how this information is generated and what we're actually looking at. So I'm going to jump right into this. When I open up the file, it's called the DRIP Minimum Investment Calculator. And today we're going to be looking at a stock which is QYLD. Pull this up on Yahoo Finance and take a look. So it's the Global X NASDAQ 100 Covered Call ETF, QYLD. Now, one of the things I like about this ETF is that they're buying stock and then they actually are selling covered calls on it. So this is an option play. I'm an option trader. You guys know that I like to do this kind of position. And what it does is it generates monthly income, and then they take that monthly income, they pay it back to the shareholders. So it's a way of playing the market. It's a generally bullish strategy. So if you think the stock market's going up right now, you would buy a stock like this, and it generates more income than, say, the SPY, which only pays like a 2% dividend. This one actually has a yield right now of 10.81%. So what I'm going to do today is actually look at how many stocks I would need to purchase, or what would be the minimum dollar figure amount, so that the dividend, when it gets paid out monthly, would actually buy me one more share of this particular ETF. Now, if you're not familiar with DRIP programs, basically the dividend gets paid either in cash or in stock repurchase. So this would be calculating out how to use the capital generated from the dividend to actually repurchase stock rather than receive the cash. I'm going to pull up the chart right next to it. We're going to pull some of this information out and fill it in. As always with my charts, we only fill out the white portions, and then the yellow portions automatically populate by themselves. So the first thing it's looking for is today's price. So we're looking at QYLD. So the first thing we're going to do is go QYLD. We're going to fill that in. And then today's price is going to be 23.20. So 23.20. Hit enter. 52-week low. So we can see that right here on Yahoo Finance. 52-week range, 1943 to 2533. So I'm going to fill those numbers in. 1943 and 2533. The highest dividend paid and the lowest dividend paid. In order to see this, we're actually going to have to go to the chart. So go over to Yahoo Finance, click on chart. So when we first pull up the chart, it doesn't have anything on here. It doesn't show the dividends. And the button is usually right here, but we have to go into full screen to see that. So we click on full screen. Hasn't changed much. We're going to look at the 1 year interval today, and we're going to click on events. So events, dividends. And then if we're on the 1 year, you can see that there's a bunch of dividend payments that show up, and these are these gray boxes. So we're just going to look through them and see this one was 18 cents, 22 cents, 20 cents, 24 cents, 22, 17, 21, 18, 20, 17.9, 21, and we're going to scroll over just a little, 21.5. So what this calculator does is it just, this obviously this ETF doesn't pay consistent dividend every single month. Sometimes it's lower, sometimes it's higher. And that's exactly what this calculator does, is it generates an average and gives us an estimate of what we're going to see. So the highest one I saw was 24.7 and the lowest one was 17.2. So we're going to put this in 0.247 and 0.172. The calculator is starting to calculate some things out. So it says the average price over the past year was $22.38. It's also telling us that the average dividend was around 21 cents. So then the last thing it needs is the number of dividends in the past year. We know that it was 12 because it paid it monthly. So we type that in. So it says the average expected dividend yield based on today's price is 10.84%. So let's just check. I'm gonna hit the back button over here. And just to compare, so on Yahoo Finance, they're estimating the yield at 10.81%, and this calculator is estimating at 10.84, within 3/100ths of the estimate from Yahoo. So you can see that it's working accurately. Now, this is the calculation. This is the bare bones of it. The number of shares required to buy one stock with the dividend payment. What I'm trying to figure out is how many shares do I have to buy so that when the dividend pays monthly, I can take that money and I can buy one stock rather than keeping it in cash. 148 shares. So I'll show you the math on that. So it's the 52-week high, so the most expensive that the stock was, divided by the lowest dividend payment, and then plus 1. So I'm just adding 1 share as a little buffer. Then the cost to buy 148 shares, the formula here is 148 shares times today's price. I mean, that's pretty simple. If we wanted to buy 148 shares today, what is it trading at? It's trading at $23.20 times 148 shares gives us the cost to buy 148 shares, $3,440. Now, the predicted monthly income from those 148 shares would be $31.06. And it's taking the number of shares that would be purchased, 148, times the average dividend, which is 21 cents. So we get a predicted monthly income of $31, which is above the highest price that the stock was. The $31 would give us at least enough income every single month to buy 1 share. So we're increasing our wealth month after month. And that's the whole plan, is that we're going to be getting rich together, because that's what I want for everybody. If you guys don't subscribe, remember to hit that subscribe button and hit that like button too, because it helps the channel a ton. I will see you very soon, and let's get rich together.